Well, hello traders and investors. I'm L.A. Little and this is your weekly NeoTA wrap. We take a look at these markets and we do it from a neoclassical perspective each time, asking ourselves what happened last week, what might it tell us about the coming ones. I do this show every Sunday evening, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube and it's under the channel L.A. Little. If you haven't subscribed and you want to, just reach up in the right hand corner and do so. Anytime I push content, you'll get a notification as far as what happened last week. Pretty much a sideways to down week, slight pressure in most of the markets, still up on the year, pretty good piece. Question is are we rolling over? And that's what I believe people are asking at this point. So let's start with the S&P 500, use it on a daily basis to begin with. You know, we've kind of had a range trade going on. It's been up here for a while. Kind of had another breakout that took place, range up there, and then Friday, a little escalation in volume, big doji bar, tested the bottom of that range. Now, I haven't pointed out, I don't think on this particular broadcast, the MTTFs. The MTTFs are mean time to failures. They're cumulative measures of the probability of a trend transitioning. So in other words, we're bullish. To transition would mean you'd have to go down. You'd have to go sideways. Usually about 70 to 80% is nosebleed. In other words, it's probably going to take place. How does a transition take place? Well, you break a swing point. Where's the swing point? It's right here now. So in other words, we're like right on the cusp. If you get the numbers and look at them, 2168.50 is the swing point. You got down below it but closed at 90.6904. That break would reset that MTTF, and if you look at it, it's only bullish 10% on the intermediate, a little extended on the short term. So what does that mean? It means you calm down, right? You calm down, you reset, right? So that you can go back up again. That's usually the way it plays out. That's usually the way you want to think about it. If we bring it to the weekly, you can see what I'm talking about. In other words, you got a nice bullish move just underway. Could take it a while before it extends to a breaking point. Matter of fact, where would that be? Well, it's about 70%. It's only at 10. This could go a long time. And so from that perspective, on a longer term basis, you need to be bullish this market. Same thing here, breakout, long-term basis. This thing's been extended for a long time. Of course, that's because of the extraordinary action by our extraordinary central bankers around the world. But nevertheless, market wants to continue going up. You need to be on the side of the market and not trying to fight it. If we look at it that way, it looks pretty strong. If we come over and look at it from a different perspective, and that is from the perspective of the dollar, you know, Yellen came out and said, yeah, it probably is the case that we have a stronger case of raising rates. She didn't set a timetable, but the dollar took off on that news. You see big wide price spread, high volume bar here. Coming back into this bar, that's where all the Brexit, move was back before. Now we come down, we test into all this area, and boom, back up the other way. This thing wants to move higher. Dollar is going to move higher. That's going to put pressure on most equities. Here domestically, it's going to help European and Japanese equities. It's going to hurt Chinese and the rest of Asia. That's generally what the dollar does in terms of equities. It also hurts gold, hurts silver, hurts bonds. If we pop over and look at those, you're going to see pressure, bearish engulfings, volume escalation on bonds. If we go and look at the, let me pull up the silver, you're going to see the same thing. Now, silver had already been trying to sell down. Silver tried to pop up, sells back down. If you look at gold, you have the same case in gold, and that is that gold also tried to pop up, sold back down. Got way up here, sold back down by the end of the day. Folks, that's going to put pressure on commodities. The dollar going up, it's going to put pressure on commodities, going to put pressure on bonds. If you're not on the right side of those trades, you need to correct it. If you are, or if you're thinking even longer term, then you just need to have your plan together and know what you're doing. Don't get thrashed around in these markets as they try to readjust to the rate environment expectations. Speaking of that, you're going to have the employment number on Friday in front of Labor Day this week. That's also going to be another nice wild card coming into the longer weekend. So be expecting any kind of economic numbers that point to a sooner rate hike to force this market to push, the I should say price in rate hikes sooner, September, not December. If that's true, it's going to put pressure on most equities. It does tend to help a few groups, but for the most part, it hurts the markets. If you want to know what those few groups are, if you want to know how I expect to trade this, come over, hit the Get Started button. For a small fee, and we're talking very small fee, you get all of these, actually these services. Let me go farther down. Here we go. You get all these services, right? All the tools, the neoclassical tools. You also get training videos, show you how to use these tools. For a small fee, folks, we're talking $15, $19 if you're paying monthly. You can't get this kind of information anywhere on the web. Hit the Get Started button. Come over, check it out. I don't know how else to tell you, the value that you're really getting for a small fee. So check it out. As far as this week, expect this market probably to range trade, reset those MTTFs, and prepare itself for a longer term move to the top side. Going to be bumpy until we get there, but I do think that's eventually where we're going. Have a great one. Take care. Good night.